Let's begin by talking about the most recent 4-day winning streak. Now, coming into this one, we ran a study going back to 2017, and there were 42 previous winning streaks of at least four since then. And 70% of the time, the market was higher 2 weeks later. And we can see that that was the case in four of the first five iterations in 2023 as well, highlighted in blue here. That, of course, did not play out in August, where we had, of course, a downturn right after. And that was the concern right here because it was a similar rally of about 4% both times. And at this point, did not make any indication of making a higher high just yet. And so, of course, this downturn occurred right after, and it's much steeper than the previous one. And this time, of course, now we're already underneath the previous low. And so with that, of course, we were now dealing with a 5-day losing streak, the biggest losing streak since December 2022. And so looking at the previous losing streaks of at least four in 2023, three of the times the market did rally in the next 2 weeks, but only one time that lead to substantial upside over the next few weeks to months. The other ones, of course, just happened where there were just mean reverting moves within this longer downtrend line. And again, going back to 2017 again, only 14 different times when the market was down at least 5 straight days. It was only up 40% of the time 2 weeks later. So a much different track record going back, and not surprising too, because we typically don't see a lot of these long losing streaks. And when they do, happen in clusters and just tells you what type of market that we're in. And so during that 5-day losing streak, we've had two 1% declines in a calendar week, which is rare, at least recently. The last time it happened was back near the March lows here. And so, of course, that stopped when the regional bank crisis was helped out by the government. Again, much different time frame now, because now we're still higher than we were, making lower lows here and getting back into a light air pocket of support. It's still dealing with, of course, the conflicts overseas, and still a lot of earnings to go. And so how does this change? Well, first we have to see a response from the short term. So this is a 2-hour chart here looking at the 14-period RSI. And so we just went from overbought to oversold during this unwind. And so, of course, when we hear oversold on a very short-term basis, that can mean that there is a rally attempt soon to happen. Now, that could occur, but not yet. And again, the other concern is that it does what it did back in August to September, the first time that we have an oversold reading, which means that we did not see a big rally attempt. In fact, the market had to roll over for a number of days afterward until finally there was a bid. Same thing happened in September, of course, stayed oversold on a short-term basis, oscillated between oversold and the midpoint until finally had that rally back at the beginning of October. So again, if that occurs right now, again, we're going to be moving lower into an air pocket of light support. And just looking at what has happened, down 5 straight days, but also 7 out of the last 8, with each of the closes being below the midpoint and most of them being right on the lows with these big red candles. We just can't go through this and believe that something's going to change until we see some sort of change of character on the very short term first. And so all of that has now brought the big bearish pattern back into play with a downside target of 4,050. We'll be talking about this downside target really since August, never happened. Of course, the failed rally brought it back into the picture in September here. Of course, we had a few weeks of downward action before the rally, and now back down below. And so now we're below this level, still making lower lows, and with nothing here near term, something has to change for the market to prevent this from actually being hit. And of course, this lines up potentially with the lows from April and May. And so in terms of other support, we've been talking about this, as the market was falling down through 4,300, where this confluence of support, 4,200 could come into play. Of course, a lot of people were talking about that. It held right on the 200-day moving average at the beginning of October and undercut the uptrend line, but rallied. Now back below both of them again, testing the 38.2 retracement level of the S&P 500 advance, testing also those highs from April, those highs in February. And look at this, 4,050 again comes into play, with the 50% retracement. Now, again, this is not a classical number, but again, a lot of people look for this. And I think it's important, especially when it lines up with other areas. Again, the lows from here and the downside target from the pattern we've been talking about. So if and when this occurs, I would think that this could be at least a point of interest. And so from a weekly standpoint, still below the upward sloping channel here. And now really flirting with this for the past 5 weeks, where back at the March lows, only closed below it 1 week and then up we went. So this is much different. And so we had a very big snapback rally to get back into that channel. It would take something just as substantial to get back above here on an ongoing basis again now. And, if it takes some time or just move sideways, that's fine and good, but it would just mean that this uptrend is behind us and we'll have to form another pattern to actually make a foundation. And so another way to look at this is just to frame all the biggest moves here in just colored arrows, right? Very simple, but I think very easy to see, where in 2022, the declines or the red arrows were bigger than the intermittent bear market rallies or the blue arrows. That changed, of course, after October of last year, when the rallies were bigger than the ensuing pullbacks. And that really became evident as we went through into the second quarter of last year. And just like that, it changed right as August began, where now the downturns have been bigger than the rallies. So this is something to look forward to. Again, if the next rally attempt finally gets us back to above a previous high, that will tell us that these blue arrows or the rallies are bigger again, and maybe we can trust it once more. But that's going to take some time to develop, at least in the next weeks or so. And zooming out on the last chart, same logic applies here. As we know, going back to the beginning of 2016, the rallies have been much bigger than the pullbacks, even though, of course, some of these lasted for a number of months and they were difficult to sit through. So now we come to right now, where the bounce that we've had over the last year is pretty substantial, but still not as big as the preceding decline. Whereas, this potential pullback, again, very relatively short right now, this is going to be a telling sign, because anything that holds before, extending lower is going to tell us that this pullback is shorter than the preceding advance. If not, then we can talk about this whole thing being just one big potential topping pattern. Again, we're not going to get any answers to this over the next few weeks to months, but it's obviously going to be something that we'll continue to come back to as we go into the new year. That's it for today. Don't forget to check out these new videos as well and subscribe, and I'll talk to you next time. Thank you.